Good morning, good evening, and good afternoon, everyone, no matter where you are. I'm here with another video on Davinci J15's channel here, and that's my channel, of course. And I have Brian Beamish from The Rational Investor, and he's the person who taught me how to trade. He made me to who I am today. And I have everything to thank him for that because I was losing money all the time trying to trade on my own, and I decided to look for someone to help me trade, and I found him on the web, and I'm glad I did. And I have him here today on my channel, and I want him to tell us a little about himself and how did he get into teaching or actually, just creating this educational program of his that helped me out so much. So, Brian, please tell us, how did you get into trading?
Hi, Dav. Thank you so much for having me on your channel. I'll try and be as succinct as possible. But as Dav knows, I love the sound of my own voice, so we have to be a little careful here. But anyway,
Take your time.
hello everyone. My name is Brian Beamish. I am the principal, along with a couple partners of mine at a site called therationalinvestor.com, and maybe in a few minutes we'll talk about what rational investing is. I suppose to give you a little bit of background on who I am and where I come from. I have probably, well, not probably, in fact, in reality, over 30 years of direct experience working in the market, an awfully long time. I got my first job in the securities industry back in Toronto, Ontario, Canada, in 1988 with a company called Burns Fry Limited. If all you old timers, if you remember Burns Fry. I sort of caught the stock bug when I was very young. I was very fortunate when I was in my late teens to be able to get summer jobs and things like that in the stock market. And unfortunately, when it comes to trading and investing, once you catch the bug, it's actually extremely difficult to to lose it. Once you got it, you're hooked. So I've literally spent my entire professional adult life working in and around the investment industry, and I sort of had I guess a desire to really learn every facet of investing and the brokerage industry. And so as a result, I took almost every possible job you can think of in the business. I've worked in operations. I ran a credit control desk for Burns Fry. Back in the late 80s, was brokers' assistants, runners, prospecting in the early 90s. Got my broker's license to broker stock deals in the early 90s. I was a commodities broker, traded Canadian dollars, and gold and oil and soybeans. In fact, I'm very interested in soy meal right now, but that's another conversation for another day.
I think everybody understands you're a real professional at this, right?
Well, I've been
And
doing it for a while. I was also a derivatives broker, and it was interesting. We had some really interesting conversations about derivatives and options recently.
yeah, I think we're gonna let's get to that later on in this
Sure, sure,
conversation.
sure. The point being that in early 2000, online brokers really started to come on the scene, and you could tell that the classic brokerage industry model was basically a dinosaur. Sort of half of the reason why we're involved in crypto to begin with now, eh?
Yeah.
Um,
So how did you get into crypto, actually?
well, I was working at I was a prop crude trader for a firm in Chicago in the mid 2000s. And actually, I guess after 2008, when the financial crisis happened. And I had a cousin of mine who actually got paid some Bitcoins for a job that he did back in 2013, 2012. And he didn't know anything about the financial services industry, so he asked me, Brian, can you take a look into this thing? Should I keep these things? Should I dump them? What should I do? And I ironically enough, at that time, I used to prop crude trade Monday to Friday, and then I would come on sites like TradingView and just chat with the crypto kids on the weekends and trade Bitcoin through the weekends. There was another gentleman in that community who he and I seemed to get along with really well, and we decided to open up the Rational Investor website. And what I noticed was, a lot of people that are involved in crypto obviously are, come from the computer industry and from the sort of the classic sort of programming industry, kind of like yourself, right? As a coder.
Mm-hmm, exactly. Exactly.
And there was really an acute need for a guy like me in this space. In fact, we do a show with Alex Stirk on Coinigy, and by all means, your audience, you should be watching those shows to get a feel for how Alex, Dav, myself, and Will interact on in that environment. But Alex, he liked to use the term that Brian injected financial literacy into this space. Where, and you kind of mentioned it right at the beginning, right? Unfortunately, if you don't understand how the game is played and how you appropriately manage risk and how you appropriately manage emotion, you can end up losing a lot of money very quickly speculating in the marketplace.
Yes.
And so
I would like to know.
Oh,
sorry, I don't mean to cut you off there, but I would like to know, why did you call it the rational investor? Right? What is a rational investor?
Ironically enough, and one of the gentlemen on the internet, and I actually had the privilege to meet him back in the late 90s, a gentleman by the name of John Bollinger. And actually, I think you really like using Bollinger Bands, don't you? I see that Bollinger Bands on your charts quite a bit.
I love the Bollinger Bands,
right.
Yes.
So
too much for this video, but
yeah, we don't necessarily need to get into that, but he actually first coined the term. And in essence, when I heard him use that term back in the 90s, I absolutely loved it. But it's really weird how the financial services industry, sometimes it warm up to terms and sometimes they just don't. And it just never caught on. But in essence, rational investing is the intersection of fundamental analysis, looking at the nuts and bolts of the story. We don't necessarily need to get into defining fundamental analysis. If I'm not mistaken, I think you even just recently did a fundamental analysis video for your channel too, right?
Yes, that's correct. Everyone, if you haven't seen my last video, it's a fundamental analysis document on cryptocurrencies. It breaks down exactly how to rate the currencies. And you know what? This is going to be a living document because, cryptocurrency space is a moving target. And you know what? As I learn more about the space and get feedback from my viewers, I'm going to be moving that document forward and making some changes. So check out that video and check out the link that I provided in that video to read through my fundamental document.
In fact,
and learn how to basically analyze crypto.
Yeah, I remember when you were a student in the program. We sort of walk through building fundamental screeners, and a lot of people on the site even to today love the very simple model. What is a good-looking cryptocurrency versus a not so good-looking fundamental story? And I think it keeps you out of a lot of trouble if you just do some homework And what does a good story look like? What does BitConnect look like?
You're the one that actually got me to build this fundamental document.
Yeah.
Not only are you a professor that's trying to convey how to survive the market, but you're actually teaching people how to find their own path in the market, right? Is that correct?
So to finish off your thought there just a moment ago, rational analysis is basically saying if we have a good-looking fundamental story, and then we look at the price chart, and we start using some very basic technical analysis to identify good-looking technical stories. A good rational investment is simply a good fundamental story and a good technical story simultaneously. Or in essence, it's, as John defined it, what is that, 20, 30 years ago, it is the intersection of fundamental analysis and technical analysis, hence the term rational analysis. I think there's a lot. It's interesting. Like I said, some people don't like to use that term. I'm not quite sure why it never caught on. It totally spoke to me, and I loved it, and it totally resonated. And I've told John on many occasions that I absolutely love the term, and I've basically used that term for the past 30 years in my analysis and work in the market. And it doesn't matter if it's a commodity or it's a stock or it's a bond or it's a cryptocurrency. It's exactly the same thing. A good fundamental story is a good fundamental story is a good fundamental story. And then a good price chart is a good price chart is a good price chart. So it's universal concept. And maybe over time it will gain traction, but actually I'd rather it be nice and quiet because I really like to call myself this and just leave it at that. And everybody knows Brian's the rational investor.
True. Yeah, so moving on, I'd like to know what is the number one mistake that people seem to make in the market?
Everybody who comes to me has their own issues. And the interesting thing is that everybody's unique. And no two people look at the world exactly the same way. But, if I was going to sort of pick a commonality as to why people fail in the marketplace, I think it's because of this term that they call hubris or ego. Or and what I mean by that is we have an expression in the market, like good traders have strong opinions, and those are fine. You're allowed to be very passionate about your ideas, but those strong opinions have to be loosely held. And if the market disproves your thesis, you as a trader, you have to be flexible and basically admit that you were wrong. And that's very, very hard for people to do. And also, too, if you don't know how to play the game and you go and bet all your money on this one idea that you absolutely passionately believe in and it doesn't work, you don't have any outs. And you're handcuffed. So as a result, it's this ego, hubris, as I like to call it, that ends up, ironically enough, it actually ends up trapping people. So I have heard you suggest, and I'd just turn the question around to you. In your community, what have you found is sort of the biggest stumbling block people run into?
Well, it's really simple. I've noticed that bulls make money, bears make money, and pigs get slaughtered. And what I mean by that
Of course.
is that I've gotten numerous stories, you wouldn't believe this, that people had like 10 million, 12 million, and as the price was going up in the 2017, and they didn't sell a thing. And now they're talking to me, haven't sold anything in, like they were talking to me in December, and they hadn't sold anything, and they're like, I don't know what to do. I've lost so much money, and I'm like, oh my God, I, I, I feel bad for them because they just didn't take profits. They thought they could get more and more and more and even more. And it's
Yeah.
so true, that statement. Bears make money, bulls make money, but pigs get slaughtered. Wow.
Yeah.
And it's a sad fact of the market. Don't you agree that 90% of the people do not make money in the markets? And why is that?
Well, I would, we have a really important rule at TRI that you got to pay yourself. When
Mm-hmm.
you can put your hard, your time and your effort into building your plan and executing your plan, but when the market actually affords you the opportunity to get paid for all your hard work, people don't pay themselves. And as you say, they often ride it right up and then ride it all the way right back down. And it's painful to watch people do that. So yeah, I agree with you. And in a weird sort of way, it's very easy and flip for me to go, oh yeah, you got to take profits at the top, right? Um, the whole point of us and our education program is we encourage people to work with a plan. And if you actually plan ahead of time, and I think this strategy actually resonates really well with your community, the sell half on a double kind of principle. You're forcing yourself ahead of time to take profits. You have no choice. You're just simply following your plan. And ironically enough, and when I was a prop trader, it was the same thing. You don't really, it's not a good idea to value or measure how good or bad of a trader you are based on your net P&L. The way you actually judge whether you are a good trader or not is how closely you can follow your plan. And as like I said just a moment ago, I've heard from you, and I see on YouTube and your Twitter feed and stuff that you're a pretty big fan of the little old lady strategy.
Definitely, because it's a simple plan.
Yeah.
It's a double or nothing, really, effectively. So the coin can go to zero or double, basically. When it doubles, I take half. And so I know exactly where my losses are and where my win is.
Mm-hmm.
And even though, do you know that I have over 120 different coins that went to zero? My portfolio is like 1000x, thousands of X's more than how much I've lost. And even though that's true, sometimes I still feel bad that, oh my God, that went to zero. Oh my God, I put money in that thing and it went to zero, and I feel like, oh, why did I do that? But it doesn't matter because look at the other side of the coin, right? I mean, my portfolio is massive.
Congratulations. I mean,
Thank you. Thank you.
I and it's kind of interesting because the little old lady strategy came from my broker days, where I actually used to have little old ladies who would come to me
Mm-hmm.
and say, Brian, I want to work I want to play the penny stock market. And of course, the penny stock market's an incredibly risky place. So how do you build a strategy so that little old ladies can actually participate in venture capital without getting absolutely destroyed? Right? And really the key here is it's all about risk management and how much money you actually put into any one of these ideas as a sort of percentage of your entire portfolio. And if you have built-in rules that force yourself to take profits, and like we'll talk about coins in a few minutes, that it wasn't just like they just doubled once. I had one coin that I think it doubled like 8 times. And I mean, you think about that, double, 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 8 times. That means the coin basically went from nothing to the moon. And every time it doubled, Brian was in there selling a little bit more, selling a little bit more. And that's how you built your wealth up like that, I would assume. That's the basic premise.
You did well in the little lady strategy, didn't you? Well,
Yeah,
you
well,
took
we
like $400 or something like that.
yeah, I started the account, and it was actually more of like an experiment. Like I said, I had my cousin say, "Oh, well, Brian, I got these bitcoins. What should I do?" And I became very interested in the space. So I was like, all right, well, let's take $500. I think we bought 1.25 Bitcoins in 2015, I think it was. No, 2014, because that's when we started the site. And Bitcoin was like 400 some odd dollars. So I just took $500 and said, all right, we'll buy 1.25 Bitcoins. It came out to like, roughly that amount. And into that ramp up, the account, we ran that $500 up to about $700,000 or $800,000. Just simply selling halves on doubles, and then taking the original capital when you get the original capital back in your hands, and just going and buying another coin. And what's super important is, as the account was going up, we made darn sure that a lot of money went straight into fiat, right, and took profits, so that when the market comes back down, we're sitting on a big pile of cash. And ironically enough, we're actually in a very strong position right now, because the market has basically washed itself out and we're sitting on a mountain of cash, and we can go shopping right now. We've got lots and lots of powder dry.
Exactly. So now that brings me to my next question: is what is your favorite cryptocurrency, and what is your least favorite cryptocurrency, and why?
Yeah, we had kind of fun chatting about this earlier, and actually, it's interesting. When we were talking about this earlier, you mentioned a coin that you really like, and I kind of like it too, because I really have a thing for Amanda, but that's another conversation for later on. But there's a couple stories that I really like in the crypto space. I really like people, and so I might argue that a big reason why I did this website was to try and help this community, like Alex said, inject some financial literacy into this space, and I think I've helped a lot of people. And I did exactly what my wife asked me to do. So, in essence, that mission was fulfilled. On the site, and when I was a prop trader, this was critical. When you come into the market and you have to risk money, you have to try and stay positive. If you don't, you can end up blowing yourself up very, very easily through what they call revenge trading, and it never works, and the market always just eats you alive. So on our site, we have a really important concept called PMA, and you've probably seen it in my Twitter, my tweets and stuff. Anybody who follows me, PMA for the win. Really, really big fan of positive mental attitude. So as a result, I really like positive people. It's one of the reasons why I really like you, Dav, is your laugh, your smile, you're very infectious. And I believe that a lot of your positive karma, that's the reason why you've done as well as you have in the world, is you have a very powerful PMA. So with that said, I really like people like Alex Stirk, and he's a principal of a coin called Ubic. I like their story, so that would be sort of one of my favorites. The actual coin itself right now is nothing really to write home about, but I believe that they have a plan, and they're working extremely hard. I really like the guys at Syscoin, same sort of thing. Very positive people, and they're working extremely hard. And if you actually look at these people's stories and you look at the amount of time and effort that they've put into them, you actually realize that this whole sort of all altcoins are going to zero talk is actually a bunch of nonsense. These people have invested a massive amounts of their lives in these projects, tens of thousands of man and woman hours in these ideas. And then there's, the sentimental favorites. One of the first coins that I bought when I started up with that $400 or $500 was a coin, and at the time it was called Duck Notes. So affectionately on the site we call it Quacker. It's the symbol's XDN now. I'm not even quite sure what they call themselves. These names have changed a bit over time.
Yeah, I know.
But I've been paid many times, multiple times, For the audience, if you want to look it up, I bought duck notes at 7 sats. So, I bought Verge at like 2 sats. And you can even see now it's 100, 200, 300x those prices. So, sentimentally, I love, Ruby coin, RBY. We did extremely well on those coins. Just following little old lady.
What's your least favorite?
So flip the coin. How ironic. I'm not really a big fan of people who do not espouse PMA. And sadly in this space, and also sadly too, when it comes to money, it can sometimes bring out the worst in our species. And
True.
I really dislike people who do not espouse PMA and who do things like take credit for being the Bitcoin creator, when of course that was nonsense. And no, I'm not talking about you. It's actually somebody else. But actually this is a good thing. This is a good side though, right? So the person that I'm talking about came out and said, "I am Satoshi Nakamoto." Right? I don't ever remember you coming out and saying, "Okay, everybody, I'm Satoshi Nakamoto." Everybody assumed you were, because you basically were touting Bitcoin at $1, which is great, And I love the karmic inertia that you sort of are riding on that. That's beautiful. In fact, on the site, we even have, we'll talk about it later, but we affectionately call Dav on the site Satoshi. Satoshi Davimoto. I love that. That's great. But so to answer your question, I really dislike people who are negative and who have a poor PMA, and I don't like the stories around people that are that way. So I don't know whether your audience is familiar, but the whole sort of Bcash story. And what's fascinating is now it's almost like the people that did the Bcash fork, now they're almost cannibalizing themselves, and they're infighting their negative karma. That negative PMA is actually, they're now turned it inside. And a guy like Dr. Craig Wright is come out and blatantly said he wants to destroy all other sort of altcoin blockchains, and that kind of malicious attitude, I would really prefer that this world have less of that rather than more.
I agree.
I have a very, very hard time supporting people and those kind of coins and those kind of stories. And then also too, the whole BitConnect, get rich quick, it's all a Ponzi. And sadly, the irony of it all is that if you actually work within intelligent communities, it's blatantly obvious who these scammers are. But if you're not intimately involved, and we have a very robust community at TRI with a lot of extremely smart traders, so our community is constantly keeping us heads up about the BitConnects of the world. So we don't really ever get involved in that kind of stuff. But those are the kind of stories I really dislike.
Okay. Interesting.
Does that answer your question? How about you, sir? Let's turn that around. And actually, I don't think we're going to get to it yet, but I'd really like to tell me, what's your favorite story and your least favorite story in the space?
All right. Well, you know what? I forgot to mention the very beginning of the video, so I'm going to mention it now. That at the end of this video, I'm going to announce what my next big altcoin is going to be, and this is not it. This is just my favorite altcoin and my least favorite altcoin. So please, if you're watching this video, stay tuned to the end. We're going to mention the next big thing in crypto. What we think is the next big thing, what Brian thinks and what I think is the next big thing. And for my favorite coin, it's I would have to say, of course, Dash. I've been saying it for a long while because I love the way they organize things, the way the governance of the coin, basically. I love the fact that their nodes are paid. I like the fact that they pay developers, and part of the mining goes to develop to organizing different projects, and they sell the coin very, very well. It might not be the best coin in the world, but that doesn't matter. What matters is marketing and how you move the coin in the right direction, and that's what they're doing.
In
They're
fact,
doing everything right so far,
we were
and
joking
that's why
about
I
that
like it.
earlier, eh? Where is it?
Right?
And do you know where Amanda is these days?
I don't know, but you know what? I remember us talking about Amanda's apartment as the coin was rising.
Yeah,
We were going, yes, this is
we
where it's
used
gonna go, to Amanda's apartment.
that's right. We used
That's
the we used to use that, and it's one of the terms I like to use when an asset is appreciating higher. You can actually see it sort of move in a very stair-steppy fashion, and I like to call it the parking garage or the department store. So when Dash went parabolic there, we talked about first it went through like a toy department, then housewares, and it was working its way up to Amanda's apartment. That was a lot of fun. And I don't know, do you know where she is these days?
I honestly, I have no idea. I think maybe she's moved on to another project or something like that.
Well, it
I
speaks
haven't
well
keep
to
track of
you.
her.
It speaks well to your comment there about their marketing. I mean, because basically, I think you could make the argument that Dash was sort of one of the first majors that really took off there. Like it took off well ahead of the Bitcoin insane rally, eh? So
Exactly.
I thought they did an absolutely great job selling that project. So that's interesting. So Dash would be number one on your list, eh?
Yes, that's my favorite. And the least favorite is,
Uh-oh.
do you remember a coin that had Mobies? Like they were
Oh
selling Mobies or something like that?
yeah. We're
Arch coin,
all
wasn't it?
yeah, we're all supposed to be living in Mobies right now, right?
Mobies are these houses on the water.
They're teepees, right? They're
Yes.
teepees on that on, and I mean, like you actually looked at the image, and the only way you could actually make this work is if you lived on a lake that was absolutely crystal clear, totally flat, and never had any waves. If as long as there was totally flat and totally dead calm, this story might have worked. And what was really sad about that, there was a couple interesting things about that. First off, it actually rallied. I think it was like 2014, 2015 when Bitcoin was coming down, right? So it actually did,
Exactly.
yeah, it did really well in the face of Bitcoin coming down. And then I thought it was a bit tragic, but they were all getting ready to ramp up for production. And I remember people were actually like, oh yeah, I'm going to get my Mobi. I'm going to be living in a Mobi. And by all means, if you're watching this video later on, you want to pause it and go Google what the heck is a Mobi. I think it was MOBY, right? So
Yeah.
Google MOBY and then Archcoin, ARCHCOIN. And there's still pictures on Google of Mobis. But what was really interesting was literally the coin ramped up. Everybody was jazzed about production, and then all of a sudden, out of nowhere, they just said, "Oh, we're not going to go into production," and that was it. And it just never came back. It was kind of sad, eh?
Yeah, but you know what? That goes to show that if you have a fourth tier coin, if you follow my fundamental analysis, you can still make your money, but don't bet the farm, please,
Yeah.
right? And don't hold on to it forever.
Right. That's
And make
if
sure you still
anything.
have on it.
Yeah, if anything, Arch is a perfect example of the little old lady strategy. You could have. I think I haven't looked at the price chart in a while, but I think you could have banged out probably 2 or 3 or 4 doubles on that thing. You just can't bet the farm on these things. That's just silly.
No,
You're just asking for trouble.
no,
Yeah.
absolutely not. So, yeah, I mean that's my least favorite coin because I actually took a little bit of I mean I did make money on that coin, but I reinvested back a little bit, and I wish I hadn't. But other than that, that was why it's my least favorite coin.
I would imagine.
So if you were to give people, our audience here, advice, one piece of advice, and when trading crypto, what would it be?
Well, ironically enough, it's pretty universal, and sort of in the stock market, you're seeing the same thing right now. I think actually crypto is like the ultimate leading indicator in our economy. So crypto topped and then broke this past year. I think the stock market is topping and is going through the same process, and will probably follow the same path over the next year or so. There's an old adage that says that recessions usually happen in years that end in eights, nines, zeros, ones, and twos. So don't be shocked if you see the broader economy roll over here. But interestingly enough, I think actually crypto, most of the pain is actually priced into the market now. And, one might even argue opportunities are jumping out right, left, and center. This is actually a really fascinating time to be involved in the space. But I think probably if I was going to give one simple just piece of advice to people, and that is just slow down. There's no hurry. I think and you can come on the site and you can see our documentation of our trading. Dav, beautiful role model. If you just take your time and go slowly and approach this as a business, you're working your plan, you come to the market on a daily basis and just have your money working. When the market goes absolutely insane and starts spitting out profits, you have your plan to force yourself to take profits. If anything, what ends up happening is you actually want to try and remove as much of the emotion from this whole thing called investing as possible. And it becomes almost like a very mechanical process. And so, the biggest thing that most people problem that they get into, of course, right, like you said, is they go and throw all their money at X, Y, and Z. And then just, it's like you basically have gone to Vegas and you put all your money on Black 9. And if you hit, great, you're rich, but the statistical odds are heavily against you from hitting Black 9. So, or is 9 red? I'm sure roulette players.
It doesn't matter, but
yeah,
yeah,
yeah, you get the
people are doing it
idea.
all the time.
So, my simple, you're asking me, is there something that I would suggest to your audience? And my simple response is just slow down, and just take it very slowly. On our site, we like to call the little old lady actual purchases, we call them nanny nibbles, where they're just nibbling away in the marketplace. And I in our education programs, heck, most of the level oneers that start off, we actually require that they log and diarize 20 paper trades before they ever even risk any of their hard-earned money. And then after the 20 paper trades, we require 20 1/10 account size trades. So, and then I believe after 40 of those reduced size trades, then you have a pretty good feel for how market action works and seasonality, and what setups appeal to you, what setups you don't like. And like Dav, for example, when he was a student, he went through the process of sort of figuring out what works for Dav. And he created a setup, a momentum setup out of the tools that we taught in our program. And even to today on the site, we call it the Davo, because it works. Why not? And really, the only thing I care about is I want to do more of what works and less of what doesn't. But you have to go through that process to try and actually figure out what it is that does work for you. So, and to answer your question specifically, the key here is you got to slow yourself down. So,
Yes, I agree. You know what? I tell people that all the time. When they're new to crypto, when a lot of people come to me that are like just started into crypto, and what I tell them, the first thing I tell them is like, you know what, slow down. You know what, there's no rush. The market's not going anywhere,
Yeah.
right? There will be all opportunities for you to make money. First, start off by buying a small amount of crypto, like $25, $50 worth,
Yeah.
something that you can play with,
And
right?
that was so
And once
hard last year, like in that crazy
you,
bull market. That was impossible to get people to slow down. It was so hard.
I know very difficult, but now it's a lot easier. So I tell them to buy $50 worth, back up their wallet, restore your wallet, and make sure you understand what you're dealing with. Because crypto, not only you could lose money through trading, you could lose money through just by losing your keys, your private
Yeah.
keys,
Yeah.
which happens all the time.
There's
And
a
so
lot
they
of
have to
moving
learn that
parts.
process first,
Yeah.
don't you think?
There's a lot of
They
moving
have to
parts in
learn.
this.
Yeah.
Yeah, I totally agree with you. And that's some people spin crypto as it's liberating, it gives you, it's empowering. You take responsibility for your financial management and asset management, but that means that you have a lot of responsibility. And unfortunately, it means that you're also very vulnerable because nefarious people can come along and derail you very quickly and very easily in this space. So I agree with you on that note. Brian, trader, right? Trader's got to trade, right? Trading plan, setups, all that. But you make a perfectly valid point. On top of your trading plan, you better darn sure know what it is you're actually getting involved with, and everything to do with security and all the nuances around risk management, what we call a systemic risk in the marketplace, all about the system of crypto. That's an excellent point that you bring up. Yeah.
Exactly. So, anyways, do you have any questions for me, Brian? Right?
Well, as always, like we talked a little bit about, and maybe we just sort of hinted, and I don't know whether you talk on your site about it, but on TRI we have a automated, like our computer programmers on the site have like automated a lot of these trade setups, and we have the Davos spitting up on a daily basis. You're famous on the site. And that's great. Half of my job as an educator is I want to make you guys famous. And I love that. The more famous Dav is about his Davos, the better. So, I wouldn't mind you actually maybe just telling your audience and YouTube and even our audience who watch this sort of the process about how you sort of came up with the Davo, and how that evolved. And was there sort of like a light bulb moment for you that sort of everything came together?
Well, at TRI, you learn a lot of different indicators and different things about trading. And one of the key features that you teach us is that you can take different setups, right? Which is basically when you're going to get into the market, when you're going to when you're going to sell your take profits, and when you're going to get out to because you're wrong. And you teach how to create these different setups, and you also have setups as well. And so I was trying some of the different setups that are available on the website, but it just didn't fit me. And what you taught was that, you know what, I'm teaching you all these things, and I want you to look for something that works for you.
Mm-hmm.
And so one of the things you taught us is that M's and W's are very powerful signals in the market. So I thought, well, what if I check the on bounds volume, which is OBB, and the RSI, and see if we can see a W in both of them at the same time, and see what happens. And once I saw that, it turned out to be a very powerful signal at all time frames. And I
Mm-hmm.
was so excited because when I was back testing it, I was like, oh my God, I found a golden thing and it worked really well.
It does. It works
And
fantastic. And
yeah,
it's interesting because as a teacher, it makes sense to me because things like MACD, Williams percentage R, RSI, they're all price momentum indicators. And OBV is a volume momentum indicator. So really what you're saying is, I just was wondering what happened if price momentum and volume momentum happen to give very powerfully bullish or bearish signs in conjunction. And it turns out it's a pretty darn powerful signal, isn't it?
Yes, it is.
So way to go, dude. Beautiful.
Yes, I was really excited about that, and I'm happy that
And did
everybody's
it
using it.
when you went through that process? Did like the light bulb go off and sort of eureka moment kind of thing for you?
Yes, it did. Yes, it did. I mean, you did show. I mean, you did. What I really appreciate about the classes is that we had one-on-one classes, and you were trying to show me, okay, well, maybe you don't like that, but how about reload zones and reload zones, right? And I was like, yeah, that makes sense, but this still wasn't for me, right?
Mm-hmm.
And so you were constantly trying to show me, okay, well, there's different ways of looking at the market. You don't have to look at it like everybody else looks at it.
That's right. And
I really appreciated that.
we sort of mentioned that earlier on. You could put like 100 people in a room, and maybe a half a dozen of them might see the same thing in the market, and a certain signaling system might resonate particularly well with those people, but you're never going to get the whole 100 people all seeing the same thing and all acting the same way. It's interestingly enough, when it comes to trading and really all of the human experience, is we all have a filter through our lives that sort of changes the way that we look at the universe, the way that we perceive reality. And so as a result, no two people are exactly alike. And a huge part of our education program is not necessarily telling you, Dav, you must trade this setup and you must trade this way. It's actually setting the table for you, giving you a whole bunch of choices and saying, well, we would ideally like to try and find 3 unrelated reasons to justify taking a trade. Indicator confirmation, indicator signals is one of the reasons that I really like to teach. And then, of course, if you have both volume and price momentum signals, well, you've already got 2 out of 3. Then all you need is some structure or half decent trade location, and you got yourself a setup. And that was beautiful about what you did, was you really made it yours. And that's what I love about working with students on the site, is my job is to try and figure out what works for Dav. And then once we figure out what works for Dav, you just run with the ball. You know what I mean? It's beautiful.
Thank you. Thank you very much.
And actually, so, this sort of a dovetail question for you. Can you compare, contrast? Can you see the Dav as a trader or investor before you knew TRI and compare to the investor trader after knowing TRI? Can you compare the two?
Yeah, the two people are two different people because they see the market completely different in a sense.
Yeah.
Before, I would trade on basically information on the news, which is just information for the masses, not for the classes. And
oh, that's fancy. For the masses, not the classes.
Exactly. And I would always make the same mistake that everybody else constantly makes, is just, oh yeah, that's going to happen, so the price is going to go up. And what really happens is, for example, whenever there's a fundamental event coming up, the opposite of what you think is going to happen is what happens, because market is a forward discounting mechanism.
Oh, very good. You pulled that one out of your hat. I was wondering whether you were going to be able to pull that off.
Exactly.
That's right.
So it prices in the event in the future.
Ahead of time.
And so when
Yeah.
that ahead of time, so when the event occurs, price comes back down, for example, in the sense that if it's something positive, of course. And of course, in the opposite direction, if it's something negative, price goes up when that
Yeah.
event finally hits.
Yeah.
So I try to convey that to people, and they don't understand it,
But let me
and they
ask you,
get
Dav,
confused.
if before the education program, if I had come to you and said, "Well, Dav, it's buy the rumor, sell the news," would you have believed me? Probably not, eh?
No,
Yeah.
no, no, exactly,
It's a
exactly.
it's a hard process. It's a hard transformation to go through. There's no doubt about it. And I got to say, to your audience, um, one of the special treats that I've been given over the past 5 years is I'm kind of like a gardener where I get all these seeds and I have no idea what plants they are, but I'm given this special privilege to water you, put you in good soil, fertilize, right? Watch you grow, help you grow, give you the best sort of odds of success in your growth. And it's beautiful watching each and every one of you blossom in your own individual way. And it's a special treat that I get, that I'm really privileged. And it's been an absolute treat watching you blossom. I mean, you're a beautiful flower and so charismatic and just for the record, when I first met Dav, I could tell that you were unsure of yourself, and I guess maybe because you lost a little bit of money in the market and you kind of were like over the top. But now when I talk to you, when I watch your videos and stuff, you're very calm, you're very down to earth, you're very, when you laugh, it comes from the belly. It's a beautiful natural laugh, and when you smile, and I think that's one reason why the YouTube audience likes you so much, right? And you have such a massive following, is you're very comfortable in your own skin right now. And I've had the privilege to watch you become the man that you are, and it's been beautiful. It really has, and it's a big treat for me. So.
Thank you very much. And I, I really appreciate everything that you've taught me, and I found my own path thanks to your classes. And so I wanted to show others. So of course, I'm providing some videos on how to trade Brian's little old lady strategy at davincicodes.net/videos. It's very basic. It will not teach you when the market's about to turn, how to manage your emotions, how to do fundamental analysis, right? And how to it does basic risk management. If you want to learn all of those things, all of those great things and more, even for example, how to buy stocks for free. For free.
Well, yeah. And actually, we just the level 3ers just did that class, and it's so cool. Like, I don't really like to talk to the public about derivatives markets, but it turns out that the whole stock market, if you can look at the derivatives market the way that the market makers look at it, you realize the whole thing's rigged. And you're right. There is actually ways that, if you understand how to take advantage of derivatives pricing models, because derivatives can zoom up in price, you can actually get the market to pay you to hold positions, which is kind of a shock, right? People, like a lot of students, just this past, yesterday I did the class. A lot of them were like, what did you just say? You don't take money out of your pocket to play the market. The market actually pays you to play the market.
When I saw that, my jaw dropped like.
But see, all the higher ups are like, shh, don't give away our secrets.
Exactly.
So
wow, incredible! Yeah. It was incredible learning experience. You won't learn that in the first year class, of course. Is that correct?
Well, yeah, I don't really like to talk derivatives to level 1ers and new people to the site, just simply because it's a very dangerous marketplace. And like you talked about, people will come in and they'll throw all their money on one trade, and you have to understand in the derivatives markets, they're designed to feed off of that public very poor behavior. So, it's critical if I'm going to talk derivatives that I already know that you understand as a student the importance of working with a trading plan and managing your emotions. You have all of the supports in place, trading logs, journals, and self-introspection, mistake logs, demon finders, all of those kind of tools in place, so that I know that you're a professional in the marketplace, and when you go in, you're taking appropriate risks. And also, too, it's critical, kind of that conversation about rational analysis. We have to be like over the top when you're dealing with derivatives about, being in high quality names with really solid technical setups to actually justify us acting in the derivatives market. So you're right. I don't even like to talk derivatives to beginners. And if anything, what I actually do is I use the education program as a vetting process, because, like at the Bitcoin top there, we had like hundreds of people coming into our level 1 program. But there's always a process of attrition. And, a lot of those people, they don't like the amount of work that I force them to do. They just want Brian, tell me to buy this and I'll get rich quick. And that's exactly what we don't want to teach at the site. So I actually use like if you really want that candy, you got to first eat your vegetables. And then, demonstrate to Brian that you can eat your vegetables, that you can behave in the market, that you are responsible and you're not going to blow yourself up. And then I'll be more than happy to let you into the candy store. And that's what we like to call that stuff, the candy store.
Yeah.
All right, how we doing on our interview itinerary? I think, are you having fun tonight? Is this is a good conversation?
Oh, definitely. This is a great conversation, actually.
Yeah, I love chatting with you, dude. So
you want to do some charts?
Yeah, that's not a bad idea. I think we have, for the sake of time, we probably want to just limit it to maybe just taking a quick boo at, say, the Bitcoin chart.
Yes, good idea.
Yeah, I have on my screen here, this is the weekly Bitcoin chart. And actually, one of the simple sort of trade management tools that I teach in the Level 1 program, all about trade location, is what we call the Fibonacci retracements. And, if anything, it's a very simple principle, but it keeps you out of trouble. And like the little old lady, she absolutely loves this kind of thinking. If you watch any of the Coinigy videos, of course, any students, anybody who watches YouTube broadcasts, those kind of things, you've probably seen this before. But I think it's, very, very important for us as risk takers in the marketplace to actually start with location as a key driver of if we're going to consider investing our hard-earned money in the marketplace. And we just have a simple rule, and sadly through this period in the Bitcoin price, we simply had to just cool our jets. We weren't allowed to buy. And we have just a very simple rule that we can start thinking about buying again when we get down to at least a 61.8% retracement of the up move. But more typically, I find that most of sort of our really good technical bottoms end up coming in around the 78.6 Fibonacci retracement level. So what we do is, on the site we teach, this is what we call the reload zone. And if you think about it in simplest terms, institutions are not allowed to buy up markets. They actually have to wait for down markets. They have to encourage the public to sell once we get down into this zone, and they end up doing what we call reloading, where they're basically going to buy back the positions that they actually sold to the public as the public was FOMO buying up top. So at the very least, we can take from this image that a lot of the risk in this market has actually been taken out. And I think you heard earlier, we were talking about the simple fact that I think a lot of, especially like the altcoin space, we're seeing actually pretty interesting buying opportunities coming in here now versus through this period, it was extremely dangerous. So that's good. Like what I like to say on the site is the fluff has been taken out of the market. This is what, I had said earlier, we talk about 3 reasons for a trade. I like to think of reason number 1 and, try and remember real estate. What are the 3 reasons that you, I don't know, Dav, do you know what the 3 words are in all real estate transactions?
Location, location, location.
Right. So that's what I like to teach in the education program, that location should be our number 1 reason for considering risking our hard-earned money. Then I like to suggest to people that we look at our indicators, and we talked earlier about things like Davos. We won't necessarily get into indicators tonight. We just don't have enough time. But what I'll simply say here is the 3rd reason, and Dav sort of talked about this a little bit, is what we call price structure, and that's simply 2 letters of the alphabet. And ideally, what we'd like to see if we're bullish is we'd like to see the letter W. Dav talked about seeing W's in his indicators, right? Same principle. In essence, what W's imply is that there was downward pressure, bear. Then the market rebounded off of that. It went down and it tested that low, but it couldn't get through it. And then the market actually turns around and goes up through the middle part of the W. And the buy signal, ironically enough, actually comes right there. And what this really implies is that we have now a new uptrend working in price. And like we said earlier, you can also apply the same concept in indicators. So with that said, and we look at this price chart, do we have this W yet in price? Not
No, we
yet.
don't.
Right? And Dav just said, nope, it's not there. It's nice to see that, yes, we did come down and make a new low, and we've bounced away from that low. But I would say, if we're thinking about this process, we've done sort of the left-hand side. Now we have to, at some point come back down and test these lows. And if this is a bull, we'll turn around, these lows will hold, and we'll turn up through the middle, and there's your buy signal. So we're still a little bit early for us to be considering buy signals in the marketplace. Interestingly enough, if we actually scroll back to this cycle, this was the Mt. Gox top. This was the bottom, 2014 meltdown, 2015 bottom, and that started the next bull market. Well, hopefully what you can see down here is price went down, came back up, went down again, up, down, breakout. And hopefully you can see the very well-defined W that I just talked about. So that's really what we want to see before we get like too bullish here. Now, if we sort of turn the equation around, and Dav mentioned this earlier as well, if W's are bullish, then that must mean that there's a letter of the alphabet that maybe is bearish. What letter is that, Dav?
That's the M.
All right, so exact opposite to the way the W works. Price goes up, pulls back off of those highs, goes up and tests the highs, but can't get through there, and then turns out and rolls over and breaks down. And your sell signal, interestingly enough, comes right there. And what this implies is basically a new downtrend has been established. So if we actually look at price right now, and it might be easier if we actually change this to a line chart for you to see this. But, when we change this to a line chart, is there any letter of the alphabet that sort of jumps out at us up top here?
Definitely the M right there.
Yeah. So, and what was really interesting is my business partner, Julian, on the site, man, he just turned into a monster Bitcoin bear right on this event. So congratulations, Julian. It was a great call. But in essence, you can see that the Bitcoin bull sort of stopped there, right? And we have this new downtrend working off of those highs. Now, as I had said earlier, that can change as soon as we start getting W's. But as you can see here, we just keep Ming out. There's another M. Ooh, look at this nasty one right down in here. Another nasty M. And even another one right in here. And, the easy way for you to actually see this, and this is what I often tell the audience, and try and remember this, good value to take away from this video, is if you ever see the market smiling at you, it's getting ready to take your money. I don't know whether you can see. Does that look like a smile? A little bit cockeyed?
Yeah, a little bit, but it works.
Right?
It works.
I mean, the long and short of it here is Mr. Market was smiling at us, getting ready to take our money. And, like probably this one, you see this even better, right? Right up in here and there and there. Big old smile. So based on just purely what we call market structure, it should be fairly obvious that we're still in a bear. But
yes, so people want to know when Lambo. That's what they want to know.
Yeah. And actually,
so why don't we take a time frame chart from from when it finally bottomed and to the top, and see how long before we can get to the next when Lambo time frame.
All right.
Assuming we've hit bottom.
So we'll look at the previous cycle. This is 2015 cycle. We could make the argument that the ultimate low came in there, and then drag our sort of date bar all the way to this cycle peak, right? So that is all the way to there. So you can see on here that actually comes out to 152 weeks. That's what is that? That's like a good 3 years, right? And you can see that the bottom actually came in January 2015, and we ended up topping in December 2017, right? You might even argue, well, there's the top, right? December 11. So almost exactly 3 years. So interestingly enough, if we project that forward, we don't know whether this is a bottom yet.
No.
But I guess, did you want to come out? Did you want to come out with an official date there, Satoshi Davinci? When Lambo? And everybody take note, right? Everybody, you can, the whole audience, the whole world watching YouTube is just absolutely hushed right now. Satoshi Davinci, when Lambo on Bitcoin?
I'm projecting 2023, April 2023.
April 2023. So if we use this same sort of thesis, let's see where this takes us. So if this is the bottom, then that takes us all the way to here, right off of the Coinigy chart. they don't even track the dates out here. That's how it is. So, and this is 1 year. So you can see here's 2020 to 2000. Whoops. How did I do that? Right here, 2020 to 2021. So that means 2021 to 2022. So if you're saying, so there's 2022 there.
22.
So that
I don't think so. I think it's going to take longer.
Yeah.
Personally.
Well, so, okay. So, there's sort of the rub. That's 2022. And you said that you think that we're going to April 2023, eh? So that is 2023 is all the way out there. So that means if we do follow this same 3-year bull cycle, that we're probably not going to see the bottom on Bitcoin until, what is that? February of next year. Ah, interesting. All right. Well, that's a bold prediction. And actually that, that does kind of make sense a little bit. Keep in mind that this is the top that we're shooting for out here, right? So what we're thinking is very much like this, sort of down, right, and then up like that. right? And of course, it should go substantially higher than that old high, right? Way up there.
Exactly.
Yeah. Okay. I think it's worth noting that, just like your Arch coin, we're probably going to have a bunch of winners in the altcoin space through this window. So
definitely,
like we said, Archcoin, ironically enough, as we sort of talked about earlier, Archcoin actually did really well right here. So, and I think Ethereum, they did their ICO, and Ethereum went nutso, its first cycle nutso right in here.
Exactly, yes.
And then, of course, remember we had like Amanda's Penthouse, right, and all that, and Pivx and all that. That all happened sort of in here. So there should be plenty of money to be made. And as I had said earlier, for a guy like me, all I care is, for heaven's sakes, don't get caught buying the assets up in this part of the cycle. Once the asset has come back down to the reload zone, and I have a general rule, try and make sure to buy at or below the reload zone. Ironically enough, for like nanny nibbles, little old ladies, I have no problem whatsoever little old ladies coming in and just nibbling away, maybe once a month, once every couple months, just picking up a little bit more Bitcoin in here. Because the great part about Bitcoin is it has the built-in deflation, right? So that at some point down the road, it will have to be up here just because of the halvening events, right? So
exactly.
That's one big reason why I really like the crypto story. Okay, I don't know whether...
That was an excellent commentary.
Yeah, did you enjoy that?
I think, yeah, I did. I think the audience will get a lot of value from that.
Excellent.
And that's now, everybody wants to know, has been waiting for the big event. What is the next best crypto that's going to blow up and do very well in the next 3 to 5 years?
Yeah, so I remember we sort of reviewed this before we got going. I find it amusing. Most people, when they're new to trading, they're like, okay, in the next week or next month, right? And as I've worked with Dav over time, and what I do with most of my veterans is, ironically enough, they actually end up turning into sort of Wall Street types, even though I know people are, what did you just say? Yuck. But it's interesting, and in the investment industry, you start every conversation with potential clients with, well, we're looking at a 3 to 5 year time horizon. So I find it fascinating that Dav's actually now thinking that window too. And frankly speaking, that's the responsible way to look at the market. It's interesting, if we go back to that chart, Goldman Sachs actually came out and recommended to their clients when Bitcoin was $1,100 through the Mt. Gox fiasco to buy Bitcoin with the caveat 3 to 5 year time horizon. And it turns out that within 3 to 5 year time horizon, if you had bought Bitcoin at $1,100, you were paid very, very well. So 3 to 5 year time horizon, that's an awfully big window. Fundamentally, I'm a trader. Trader got to trade, right? Buy, sell, hedge. And I'll help you learn how to build trading plans and technical analysis. Ironically enough, I actually lean on the TRI community and alumni like yourself to actually help me with a lot of the fundamental stories in the crypto space. So, you can ask my opinion, but what I'm just going to simply tell you is I really like the direction that these people are going, and I really like this story. So, if I was going to give you a name that I think is going to do well over the next 3 to 5 years, it would be things like Ubic and Alex Stirk. The Syscoin people, I think they're building out a platform, and somebody like Walmart or something is going to come along and say, here's $1 billion, we want your coin, thank you very much, done. There's a couple names, I think it's RLC. I've been noticing that one's been moving up quite a bit lately. We've done well on it in the past, and I hear a lot of positive. MCO, that's another one that I think is going to do really well. They got a lot. The machine I can see is behind it, and I think they even rebranded themselves Crypto.com or something like that. So, that's, what is that? Ubix, Syscoin, RLC, MCO. So I've given you 4. But really,
we're only looking for one. But
yeah, and remember, that's Trader Brian. Spread the risk, right? Don't want to take too much risk in any one name. But interestingly enough, this part of the video, this is where Dav shines, because Dav is intimately involved in the space, and really, I'm very interested to hear what he's interested in. So, Dav, really, the $64,000 question is, what name do you think, and what kind of concept do you think is going to do really well going forward?
Well, I like a coin that has POW, right? That's proof of work. And uses UTXO. And now, if you don't know what UTXO means, you're going to have to Google that because it's just too much for this video. And also has some privacy, has a lot of privacy built into it as well. And that coin is, for me, is Grin. It's not been launched yet. They don't have a main yet.
How do you
It's
spell
gonna be launched
that?
on January 15th.
How do you spell that?
Grin. Grin. Like
Oh, okay.
Grin.
Okay. All right.
It uses Mimblewimble to do the privacy side of it, and it's a lot faster than Bitcoin. It's a lot compact, and so I think this coin is going to do extremely well. Yes, I know there's other competitors like Beam, which is already out right now, but
Is it an ICO?
It's not an ICO because they're going to be actually mining it. So that means it's going to do something crazy like Zcash when it does get hit onto the market and people start trading it.
That thing just went crazy right out of the beginning, huh? Yeah.
And do not buy it, please, people. Do not buy it once it hits the exchange. That's a big mistake.
So what you're saying is sort of let it have its blow off top, then let it come down and sort of consolidate a little bit and show us a technical bottom. Show us a W. Is that what you want to see? You want to see the W's?
Exactly. Right. So just be patient. Don't get involved in all the fluff and all the hoopla that's going to be surrounded once this coin hits the exchanges, because you will get wrecked. Seriously. Let it settle. Be patient.
Okay.
The market is not going anywhere.
And
you will have your opportunity.
And the way that I'll remember this is I'm going to think of Dav's infectious smile. There's the grin. All right. That sounds good. All right. So Brian's given you a few names from his gnarly trader perspective. Mm-hmm. Dav's given you a fundamental idea that he thinks is going to rock the world. That's awesome. Awesome.
So, Brian, if people were interested in your educational program, where can they reach you?
Okay, our site, of course, is called therationalinvestor.com. Fairly simple to find on the net. We do have an education program starting up, a new level 1 program starting up middle of January here. So by all means, filling up, seats are kind of filling up pretty fast. So, if you are interested, probably best to reach out to us. If you'd like to follow in Dav's footsteps, we can get you going, like I said, about the middle of the month here. As well, I'm on Twitter at CRInvestor. So by all means, if you'd like to follow me on Twitter, you can do so. And I also do some fun free shows on the weekends on YouTube, and we like to call the show the Broiler Chicken Show, because I used to trade live hogs and feeder cattle and pork bellies and broiler chicken futures. And that always, whenever I used to talk about broiler chicken futures, that always puts a smile on people's faces. So we named the show the Broiler Chicken Show. And our marketing guy goes, well, now why on earth would you pick that name? And it's funny because YouTube, because they do their algorithms, right? So I'll record the show, the Broiler Chicken Show, and then the videos that they feed in afterward are like farming 101 and how to raise chickens and stuff, right? So, you know, it's a near and dear name to me, and it makes me laugh. And you know, PMA for the win, that's a big part of it. But it's a funny way to remember, Brian. But it drives Google and YouTube analytics crazy.
Exactly.
So,
Sure.
therationalinvestor.com is our site. And as I said, we have a new school program starting up the middle of the month here in January. So, does that answer the question?
Yes, it does. Please,
Okay,
and people, feel free to follow Brian at CR Investor on Twitter. Links will be provided below for everything that we talked about. And I guess that's it for the evening. Thank you, Brian, for coming out and joining us this evening. And bye for now.
All right, everybody. Thank you very much for your time. Thank you, Dav. Always a pleasure chatting with you. Say hi to Waffles for me. He just walked by in the background. And the only thing
my cat.
Yep. The only thing yeah, that's his cat. And the only thing I have left to say is bye for now.